Hello traders, today is the 28th of January. My name is Double Hornsey, market and trading. And today I want to take a look at the UK FTSE 100. First of all, start with the YouTrading.com Forex heat map. You can see the bottom left-hand corner is turning solid red. Top right-hand corner is turning green. So for me, the London session has started today risk off, moving out of commodity pairs into the sort of safe haven of the US dollar here. The yen and the Swiss franc are mixed at the moment. The yen is not doing so well against the dollar and the pound and the Swiss franc and the euro, and the Swiss franc is doing better generally. So not entirely risk off in terms of moving into safe havens, but this US dollar strength is causing a lot of problems. If we go to the actual yields, see what's going on here. Got the 10-year yield rising 1.835. The sort of impulsive move that started from beginning of December. Look here, got the gilts 10-year yield. UK debt is basically going higher as well since December, as is German debt yields, but they're still negative. So rising dollar is going to cause problems for commodities. And if we look to a heat map of the FTSE 100, we can see that financials, consumer, non-cycles, basic materials, pretty much everything apart from a little bit of technology and some specialty retailers and some food and drug retailing are doing worse today. If you go to the active trader platform, you can see the London session started off red. We're dropping from the 7,584. We've come down to around 7,450. Back end of November, 26th November, we had this big down day, and that was the sort of capitulation of sellers. They got down to the 200 EMA, and then the buyers stepped in. From that moment, this low here on 30th of November, we've had several waves higher. So we've had this one wave up, second wave corrective, bigger third wave impulsive move. Then this fourth wave correction is started from the peak here, 18th of January to 20th of January. It looked like it might have finished 24th of January, as we saw, big rejection of this candle here from the 20th of December. Unfortunately, we've got back up to this supply zone and we found resistance. The buyers have given up, the sellers have retaken control, obviously, today. And we're looking to see if we get this correction over time. So whether it sort of extends out into like a triangle sort of formation, or whether we get it over in price, and we start to sort of take liquidity from underneath these swing lows here. So going down to a 4-hourly time frame, sort of see a little bit clearer. Sort of impulsive move to the downside, then 3-wave correction higher, found resistance. This particular candle here, this green candle here, it's got the highest close. That's obviously where the bulls got trapped, and now they flipped to being sellers. Seeing it come down towards the 200 period moving average on the 4-hourly charts. I'm looking to see if we can take out the swing low here, mark up this swing low here. So these are my two swing low targets, see if there's liquidity under there. Obviously, we've got this sort of imbalance here of volume. So all of this could be tested first, and then buyers might actually come back in. Anything below 7,368, and then I'm starting to look for these swing lows even more. If we go back to the beginning of this move, get the Fibonacci tool from the low, take it up to the high from 20th of January. Now, if we look to the left, we've got the 50% retracement already been tested. That was the 24th of January move. So we had this big down spike higher. If we look to the 61.8 to the 78.6, we've got the 7,120 as a target. And then if we look to the left, we've got not exactly equal lows. We've got some nearer equal lows back here from the 3rd of December. So again, looking to see if that area and this swing low here gets tested. So I think if we are going to get this deeper retracement, I'm not sure that this impulsive move is valid anymore. A lot depends on what happens between right now and the 7,365. US 500, the Dow Jones, the NASDAQ, German DAX, they're all looking weaker, basically as the US dollar rises ahead of the FOMC March meeting where they're likely to raise rates. It's going to put a lot of pressure on commodities as the US dollar rises, and especially the UK100. Obviously got lots of financial exposure, but also mining and oil and things like that. Okay, if you made money this week, well done. Hopefully you'll keep it today, and I'll see you next week. Right, take care. Bye-bye.